After a volatile week, the Dow finished the day up nearly 500 points. With so much uncertainty ahead of the new tariffs, our Jennifer Zucker joins us live in the studio after speaking with a local financial advisor about the potential impacts tariffs could have. Jennifer, what's going on?
Yes, Catherine, I spoke with a local financial advisor who says consumer spending is what drives our economy, and that has already started to slow down. President Trump's trade war against America's three largest trading partners, Mexico, Canada, and China, led the stock market to plunge on Tuesday.
We can really see markets kind of starting to contemplate what the future looks like with lower corporate earnings and probably a lower markets trading at a lower multiple than they were in January.
Trump imposed a 25% levy on most imports from Canada and Mexico, a 10% tariff on Canadian energy exports, and tariffs on Chinese goods were increased to 20%. The president says the tariff's chief goal is to combat illegal immigration and the tide of fentanyl, and counter tariffs other countries already have in place against the U.S., adding they are being imposed because the United States has a trade deficit with the three countries. But financial advisor Brian Ullman says investors are feeling concerned about the effects.
Investors are having to digest this new information, and frankly, some of them are probably calling a timeout to let the dust settle.
Ullman also says consumers cutting back on expenses due to higher costs of goods and services will negatively impact the economy.
Tariffs tend to be inflationary, right? They're going to push prices higher, which is going to stretch everybody's spending dollar even further. If consumers are spending less, the economy doesn't grow quite as much. And there's a very real possibility that our first quarter GDP could be negative.
And it is not known when consumers could feel the impact, but it is predicted to be very soon. For now, live in the studio, Jennifer Zucker, CBS 47 Eyewitness News.